Before we dive into today's podcast, I just wanted to say a big thank you to our new sponsors of the next few episodes, and that's SumSub. If you haven't heard of SumSub, they're a global AML, KYC, and KYB solutions business operating not only here in South Africa but across the continent. Great business, great group of people. Got to know them really well over the last few months, and a big thank you to the entire team for sponsoring Talking Success and the next few episodes. So if you are looking for any compliance solutions around AML, KYC, KYB, give the guys at SumSub a shout. You'll be in safe hands. So thank you very much and enjoy the show.
Hey everyone, welcome back to Talking Success. We are tackling the world of lending today, different type of lending. We've obviously covered microfinance, we've covered some sort of payday loans, we've covered employer wage access with Brian and Dion over at Pay Me Now. And now I'm joined by Mike Adamson. From Eshandi. Now, you may not have heard of Eshandi, and there's a reason why, and I'm not going to do any spoilers. I'll let Mike sort of tell the story, but we do know Mike pretty well. Bit of a plug here for TITC. We did actually place Mike in his current role as CEO of South Africa for Eshandi, so a bit of a plug there. I'm allowed to do that. It's my show. But Mike, listen, thanks so much for joining. I know we met a couple of times. We met at Stigma a few weeks ago, and it looked like you guys were having fun, and you had lots of people standing around you and wanting your attention. So either you're just a very charismatic guy, or clearly you've got a product that people really like. So give us an overview. Tell us a bit about you. Tell us a bit about Eshandi and obviously what it was and sort of the rebrand and the reason for the rebrand. And then I can just dive into some questions for you, really.
Thank you so much for that. And I don't actually like sharing our secrets, but you know what? It's actually in the blue shoes. We realized that I was chatting to my colleague Vishal as well, and everywhere we go, they're like, keep doing the blue shoes. So it's that, and then ask, are we celebrities? So okay, that's the secret. So yeah, but anyway. But thank you for that, Darren, and thank you so much for having me on your podcast. It's really a pleasure to be here, and and for placing me in my role. I really appreciate it. So to give you a bit of background, so Eshandi actually started off as Premier Credit in Zambia. 2019, also just doing the typical lending thing, started off small, to the fear, and her husband started the business, and it actually just gained so much traction. It just blew up, and obviously it showed that there was such a big opportunity in Zambia for this product. So they grew into, we started doing micro lending, SME lending, it was helping some businesses, women-owned businesses. Guys typically would struggle, to get capital, and that did well for quite a few years. And now the expansion plan kind of got implemented since last year, and that's where SA came in. So we said, right, let's get into other markets, from an investment perspective as well, spread the risk, open up some markets, don't put all the eggs in the same nest. So we had Zimbabwe, did some collateral lending there, also, evolved into payment loans, etc., or payday loans, Kenya, and then obviously South Africa is where I came in. So in South Africa, we started from scratch last year. Entered the market. We also have this, from group level, we don't copy and paste, because a lot of people, when they enter Africa, they think, oh, we're going into the continent, let's do this. But each country is its own, right?
Country, isn't it?
Exactly that.
Right?
So, it's like, oh, yeah, Africa. Okay, we're in Africa. No, Africa. Anyway. So, at the bottom, we're the Europe of Africa, right?
Absolutely, yeah.
Anyway, so we said, right, we obviously the group vision, we are in the Challenger Bank, we're doing financial services throughout Africa, but in South Africa, we said, right, we are quite overbanked in a way. So we're not really entering the market as this bank, even though we have the functionality of the banks. But from a lending perspective as well, how many micro lenders are there? How many, of these guys are in South Africa, and people are kind of struggling to pay back the debts already? So is it somewhere you want to enter right now? So we said, you know what are the challenges in the lending space? If you don't mind me quickly just giving a background on what we're looking to do. But our product is, okay, yes, like we mentioned, Engage Access, we have this because the point of what we do is to help this market. Now, everybody preaches unincluded market, right? So what is the main problem? Why are these people actually unincluded? Is it because it's too expensive? Is it because they don't have access to it? Is it because they don't, And we're saying, okay, but giving the same product to the same client base, but just charging them less or delivering it quicker isn't really like including anyone new, is it? So we're saying, okay, where's the market that's actually unincluded, but they're still a good client? So at the show after my talk, people are coming like, oh, so you take these guys on that are like bad risk, high risk. I'm like, no. I don't want the bad clients. I want the clients that are good clients that aren't meeting the normal check boxes of the big players. Because they might not have typical income that you see in a typical bank account with the statements, but they still pay the same bills differently, or they spend a certain amount of time, like something stupid like proof of address. Okay, I don't have a bill that I can submit. No, you can't prove my address. Okay, but we have location-based services. We're chatting about it now. How long do you spend in this point? Do you sleep there every day? Okay, cool. I'll prove your address. I think some of the banks are starting to do that now. Anyway, so we're saying, okay, so we can call it alternative lending, and we're saying, right, let's help these guys get into the lending market, okay? Because even guys that are earning like 15,000 Rand a month, they're young, 26, they're not getting access to credit cards and overdrafts, and they're seen as high risk clients. So then if you get that loan, they make it impossible to pay it back. So it's like, okay, cool, you're high risk, you can't afford this, let me make it even more difficult for you to afford it. Okay, it's, for me, that logic doesn't kind of make sense. So we're saying, right, we're going to introduce this to this lower, not the lowest of the low LSM, but like sort of like 3 to 5, maybe the lowest 3, at least have phones, etc. But let's prove, like say for example, in a loan you have a box to tick pay slip, or like I said, location. We still meet the requirements, but we use alternative data to tick that box. Okay. And we can actually give them small loans like we're doing in Zambia. We start off with, let's say 250, 350, right? Give them a chance to pay this back and actually introduce them into the lending market. And we're not entering it just saying we're doing loans, okay? We might say, right, you had this emergency, okay? You've paid that emergency, but now you can't eat. So you could actually get that loan specifically for groceries. It's kind of a mindset thing, right? So make him think of how he can use it. Because let's face it, if you say a guy, okay, you have access to 1,000 Rand, but you actually need 500 Rand, what's he going to do? He's going to take the 1,000 Rand, right? Because they don't, like that market isn't just upgrading their car or buying a new house. It's like they buy experiences as well, like they couldn't buy this chocolate for their son, but now you've given them access to funds, now they can. So you're kind of giving them, the ability to afford this, but also making sure that they can pay it back, because they're going to loan sharks, right?
And then, Mike, how do you do that? So if using your example, right? So someone said, actually, I need funds for groceries. Are you dispersing cash or are you dispersing vouchers?
Both. So, for example, if we, so some of it's partner based, right? So if you partner with a retailer, so loyalty program for us adds a lot of value, because, for example, if you're using this loyalty card regularly, we're getting an idea of your spend. So even if you're using cash, right, it's not a bank statement. So that's an alternative way of sending me your bank statement. Now you can actually send me your spend history of your I don't know if I should mention other brands, but for example, Smart Shopper, okay, is an obvious one, right? Yeah. You're swiping your Smart Shopper for all these discounts. You're sitting on all this data. So instead of just using it for a promo to say, listen, this thing is now cheaper, I see you buying it regularly, I can actually use that spend history to say, right, this guy is spending 1,000 Rand a month on groceries. Okay, for me, that's, it's very, very usable data. And we can, on our platform, so we have this AI machine learning platform that obviously builds this profile. So we don't call it scorecard, because a typical credit score, you just have the scorecard of your financial situation, where we say we're building a digital profile of you. Okay, so we have all this data that we bring together to say, not only can you afford it, but are you a good person or a good payer? Okay, so that's where we bring this alternative data in. Because you can't just say because a guy is not living in a fancy house that he's not a good payer. He's going to. Why would the loan shark business be doing so well if people weren't paying it back? Yes, okay, they kind of force you to pay it, but still you're able to pay it, right? And that's like 50% interest. It's ridiculous. So why do you want to do that? Come to these guys and give them a fair chance, and then you can kind of give them hope that one day maybe they will qualify for a study loan, for example, because now they have a credit history. So that's kind of the whole point of Eshandi, right? And just to get back to the name, I mean, Shandi means mine, right? In the local language.
Means, sorry, what mine?
Mine. So mine.
Mine. Okay.
In the local language in Zambia. And the thing is, the main reason people aren't using financial services, and this is why, the questions I asked at the event was, why do you guys think people are not using it? Is it just because they don't have access to it, like literally access to it? No. I mean, how many smartphones are there now in South Africa, or in Africa as a whole? It's not just the access. Is it the the price or the cost? No, it's the trust, both ways. And that's still the main reason. Like, for example, if I put this 100 Rand note next to me, tomorrow I don't wake up with 99 Rand 50. It stays 100 Rand. So they know that no one's going to take it. So if you can kind of give them that comfort that their money is still theirs. So I see the Eshandi app or, the Eshandi services, it's mine. It's kind of a psychological thing as well. We're not taking anything from you. So the whole point is really to give them that true access that they can afford these financial services and introduce them into this new market. Yeah.
So there's the access, which you mentioned. We do have a lot of smartphone penetration. Yeah. There's a lot of connectivity. So, perhaps for the sort of LSM that you're targeting, 3 to 5, okay, data's still expensive, get that, but hopefully that's being worked on. Certainly with some of the new operators, MVNOs, they're coming into the market. We talk about education, and we talk about literacy, and I think people get these two phrases and they lump these two together. Financial inclusion, financial literacy. It's together. It's the same thing. Well, actually, it's not. And I think financial education and financial literacy are two different things as well. Trust is also a massive barrier. I think as we've seen, and I've said this, I don't know how many times on this podcast and in events, the modus operandi here in South Africa and probably for other parts of the continent as well is I get my salary paid on the 26th, and on the 27th, I'm queuing at the ATM to withdraw my funds. Now, there's a number of reasons behind that. One, there's not necessarily trust in the banking system. Secondly, if I've got money and it's in my pocket, then I'm in control of it. And thirdly, it's safer in my bed or down the side of my sofa, according to some people, than it is, sort of sitting in a bank account where I don't have any access and I can't see it. Yeah. So you put these three things kind of working against any digital platform. What are you guys doing in terms of breaking that down? Because it's not an overnight thing. You can't just go, just trust us. People don't know Eshandi. They don't know Premier Credit. They may not even know some of the more local operators that have been here a long time as well, or might lump everything to do with financial services, loans, payments into it's banking, right? So we don't necessarily trust banking. How are you breaking those barriers down?
Okay, well, first of all, you can't take that away entirely, like you said. I mean, cash is still king because, and the main reason for that is really, also you can't use it for everything. Like, for example, paying taxi rides and that type of stuff. So, when you launch your wallet like we're doing now, we have to give them the ability to still take the cash out, even though we're not driving that behavior. But that's why a lot of it's psychological as well. And now we're lucky now because that's why we're entering this market at the right time in SA. If we were doing this like 7-8 years ago, I was literally walking around. We had this advertising platform. I said, would you put your card details in my app? No ways, not a chance in here, So anyway, now we're a little bit more accustomed to that type of stuff. So you can see people are now opening up these lower end bank accounts. So look, it's kind of a psychological thing as well with how you take it to market. So it's not that you're necessarily taking something to market entirely differently, than the actual banks and so on, but how do you position it? So for example, with our wallet, we have a reason for it, right? So it's not that we're just hitting the market saying everybody sign up with the Eshandi wallet. There's a reason for signing up. Even like, for example, you're getting your MyPay, which is now your earned wage access, or you've qualified for a loan, or you don't have transaction history with us, but we would like you to qualify for a loan, to learn about your credit score, etc. Then sign up with Eshandi, transact, we learn more about you. So it's always like, how you position yourself in the market, but you also still give them full control. So for example, when we launch a card scheme, this is now more in Zambia as well, you give the user control to put funds where he needs it. So why some of these card schemes are a bit like frowned upon in that market as well is they're not comfortable walking around with a physical card with all their money on. Okay. So what they want to do is they have their main wallet where nobody can touch their money. When they want to spend on their card, they transfer it to the card and they know that's what they can spend. Same with collections of loans. you transfer into your collection wallet. So we don't just take like a debit order from your main money and you go, oh, damn, I don't have control over this. You decide what you can afford, even though there's funds, you transfer it to the wallet and then we take it. So it's all about giving them that control still. Look, it's going to take a lot more time for them to completely trust the digital space for that reason of someone can take this money, without me giving permission. And that's why we kind of focus on not doing that. Give them comfort, give them control, open up the wallet. You can still take it out if you want to, but we encourage you not to. Reward them for behavior, etc. And this might sound all obvious, but it's just actually you can take the same product to market and say it differently and get trust from your client than not. And we actually bring in community into it as well, where we say, right, I might be a young student, okay, not qualifying for a small little loan, but my father is, quite trustworthy to get a loan from Eshandi. We can say, right, stand surety for your kid, and that is just, it mitigates the risk, obviously, first of all, because it's almost like, okay, so why I'm saying this is in Zambia we have peer-to-peer lending, right? So we say, okay, I'm physically lending my money to someone else for interest. But in South Africa, we say, right, it's not you physically lending your money to someone, but you standing surety for that person to help them. So you're putting 1,000 rand there, for example, which we can now say, right, we're lending to this person. If he defaults, you're happy to pay on his behalf. But it's still a physical loan for that person, which means he's now taken an actual loan from an NCR licensed entity, not a loan shark on the corner of the street, and he's paid it back, which means it's now logged on his actual credit history, introducing it. So, and once, that gains traction and so on, communities trust your platform, then you have a much better chance of actually, getting the rest of the world to trust it, or the rest of the country to trust it. So it's all going to be transparency is the big thing, be very transparent.
Going back to your point a bit earlier on, it's kind of, it's about changing habit.
Yes.
As well. Yeah, mindset, of course. Eshandi mind, get it now. But it's also about, I think, helping consumers, understand the benefits of taking a loan. I remember growing up as a kid in the UK, and the minute I turned 18, I remember my father going, "Don't you dare get a credit card! Like, don't you dare!" Anyway, I ignored him. I got a credit card, and I spent the next 4 years trying to pay it off. I had a great 3 months though, thanks to whoever gave me the credit card.
If it lasts more than a long, you did well.
Absolutely. I think I lost it for a few weeks, but I think there is that sense of, okay, I'm getting a loan, so I'm getting into debt. Now, that's not a good thing in anyone's books, right? But how do I use a function or I use a product like Eshandi, not to get into debt, but in order to build up a profile for myself? So when I do then, in the future, I may want to get a car, I may want to get a bond, I may want to, get a bigger loan for varsity or, my children, whatever it may be. I have that background, I have that sort of credit record of being able to go and do that. Because listen, I mean, I would imagine 99.9% of people, certainly on the continent, can't go out and go and buy a house outright. I mean, I know I can't. I wish I could, but people are going to need bonds. They're going to need to leverage, alternative sources of finance in order to, provide for families and kids and what have you. So it's about habit forming.
Yes.
I think what I've seen a lot happen with some of the, the successful fintechs that are operating at the lowest LSM level is they're kind of breaking this down and almost gamifying parts of this process. And to say, actually, if you do X, you get Y.
Yes.
Then if you do A, you get B, and so on and so forth. And you kind of alluded to that a moment ago with rewards.
Yes.
How does that work within the Eshandi platform?
Yeah, exactly like that. So it's behavior based, right? So you kind of reward them. So even if you're standing surety for someone, maybe you're not just doing it to help them, you also want to reward. So we do have that functionality, like bus tickets, for example, is very popular. And you think about this other sim that will go to the beach. We all want to go there, over New Year's, etc. So that's like a very good reward to use. But if you just tell them something that's useless, then obviously you won't have traction. But also, for example, the way that you structure or once again, when it comes to mindset, you're not just giving them a loan. When it's a purpose-based loan, for example, for groceries, like we were chatting to one of the retailers, he said, okay, we don't just want to give these guys cash to go and spend because, like I said, if you get cash, you're going to spend it, but you might not need what you're spending it on. So what we want to do is target the market that need these loans, not want it like we do. Like we want a credit card, we want this car, but they actually need it. So you kind of structure your way to say, okay, but you've paid for the emergency, you need a loan for your groceries. Okay, and that's why we can do with our vouchers as well. Scan to pay vouchers and those good things. You can actually redeem that anyway. So you're kind of giving them a purpose for the loan. And we were even chatting about it the other day in the workshop. Something interesting that we would like to actually do in our next market research is to ask people, like, what would you do if we gave you, say, no, because we pre-score most of our clients, right, to the data that we have, and we say, okay, but you have qualified for this Checkers voucher, okay, and we put it into their wallet, and we say it's there for a rainy day. Are they actually just going to go and burn it, or do they actually keep it there as like a backup? Cool, this gives me some comfort. So next time I get an emergency, I can spend it. And from a business perspective, it makes sense because giving them that voucher doesn't actually incur any capital or, not investing anything until it's redeemed, right? So it's kind of a clever way to give them a loan without dispersing money. We can do the airtime or anything. You give them the voucher, but until it's redeemed, nothing has actually happened from a transaction perspective. So just peace of mind, for them.
Yeah.
So,
and maybe there's a next step to that, right? So we talk about sort of financial education and financial literacy around loans and why actually they can be beneficial as long as you are in the right mindset and you pay them off. But there's the other side, which is interest bearing. So okay, I've got money and I may not have to use that £100 this month, and I want to keep it in an account. And yes, it's safe and it's sitting there. But if I took it out of digital and I put it under my sofa, it's still going to be there.
Exactly.
Now the difference is if you can apply some yield to that, even if it's fractions of of a percentage, but people can actually go, oh, hang on, my £100 just turned into £101. Like, how did that? Again, my stepdaughter, she's 9 years old. She's got a mum set her up a time bank account. And she's got a little cupcake business on the side. My 9-year-old, not my fiance. And she came to us a couple of weeks ago. She went, "Oh, there's something wrong with the bank." Why? She went, "But there's more money in there than there was the other day." That's because of interest, right? And having that conversation, and whilst it might seem sort of a bit sort of trivial to us, but having that conversation 8 to a 9-year-old, but also I think to other people and the wider population, say actually, if you don't spend it or you don't need to, keep it in this format, keep it digital, because you can earn on this. If it's sitting in your bed, under your bed, or in a safe somewhere, you're not going to earn any interest, and it's just going to stay there. It's not going to rise with inflation, etc., etc.
Exactly.
These can be quite complex sort of things to get your head around. If you haven't been exposed to this kind of world of financial services and interest rates and what's compound interest and what's APR and all of these sorts of things, if you can give, I think, a consumer something back to say, yes, look, you can loan from us 100%, but you can also earn from us, and this is how you do that. A lot of the FSPs across the continent do that, but are they overt enough? Are they actually talking to the consumer and explaining that we can send you a voucher for Vodacom for $100, okay? But if you don't need it, don't use it, because in 2 months' time you'll get $110 or $105 or whatever it may be.
Exactly.
And I guess there's a model where you can offset interest. Anyway, I'm getting into detail, but I do think that when we talk about loans, people do go, "Oh, credit, oh, debt." But I think if you again flip the conversation around and talk about the bigger picture and show what can happen if you do build up a credit history, what the benefits are, I think it's a great thing. Question for you then: massive population, South Africa, 60 odd million people. How are you reaching your target audience? Because again, yes, they may be digitally savvy in terms of having smartphones, but again, they're not necessarily driving through Santon or Rosebank or
Mm.
don't know, Constantia or Newlands and seeing billboards
Yeah.
necessarily. Okay, they may be working in their communities and townships. How are you getting the message out there?
Yeah. Okay. So look, one of the obvious routes here, obviously, is the WhatsApp channel as well. So we actually had a meeting this morning again on our next, like a marketing campaign. So it's a pricing model, yes, but it's very effective. So a lot of the guys, your big players as well, instead of sending the typical SMS or phone call or whatever, WhatsApp's still proving to have the biggest conversion rate. And that's why our full functionality of the app, etc., is also going to be available, on the WhatsApp channel. Because remember, in this space, an app on a phone is difficult. So yes, we have the app, but we don't rely entirely on it. Because if you have the smartphone that you bought now, the low end one, because everybody has access to smartphones, but they're not all Samsung S20 Notes. You have a limited amount of space. And if you're the top app on there, taking the most space, not only the most data, but the most space on the phone, you're going to be deleted first, and then your whole business is down the drain. But the chances that they're going to delete their main form of communication, WhatsApp, is tiny. And what we can do on WhatsApp nowadays is amazing. Full KYC, transact, etc. You can do on there. So that's very effective. We even did our market research, like that as well, where you bang out an SMS and obviously reward them for the responses, etc. But that's very effective. But also, foot soldiers look in this market still very effective. We have our gazebo, we have our teardrop banners. You go and set up. You speak to your client in person. You sign them up. You get them going. It's very effective because you don't have to sign them all like that. But that's how you get word of mouth out. So that's also proving to be very effective. So look, people spend a lot of money on marketing and so on, and you don't really get the turn rate or the reaction that you're hoping for. So that personal, like you said at the event, when people see you and you're creating this good energy, everybody tells us we have this good energy, and they want to know what we're doing, and we get actually requests for stuff that we don't do just because it looks like we do stuff in the right way or a different way, is how they say. So, you have to get out there, put the brand out there, and tell people about the brand personally and not just rely on the digital channels. So yes, the using of the product, yes, but getting them to trust it, it's not always that easy as a Facebook banner ad, like I say.
No, sure. But again, if you look at probably, I would argue, the most successful fintech in South Africa, at the lower LSM, it's Time Bank. Their go-to-market strategy with a kiosk, effectively the ATM machine at the kiosk with a physical, the brand ambassador, I can't remember what they called them, standing there, being able to have conversations with people and explaining what this thing is. So you had that sort of digital, right? So you have the physical and digital, you kind of combine them. I thought that was a genius, but clearly it's worked incredibly well.
And I must say, like from a banking perspective as well, what I've found is because of the social grant, that's also why we're so banked in SA. So market research, chatting to some people, you see they all have these bank accounts, like Time Bank, for example, and all that's getting paid in there is the social grant, okay, but they're still working and accepting cash. So then I'm like, okay, but is that really banked? They're just getting the social grant in there. But that being said, it's just what it tells you is they haven't changed that behavior, like you were saying, to actually use it as a full-blown bank. Because if you now pay into that bank account, then they lose their social grant. And let's face it, every 350 Rand for those people is a lot of money. So they have creative ways of doing it. But I agree with you to that point, the physical presence. And you don't have to be everywhere. You just have to be in the right place to tell the right people, and then it will spread. In this market, word of mouth is powerful. So...
And then, Mike, tell me in terms of, you mentioned right at the very beginning, it's not a cookie cutter approach, right? It's not take what we have in Zambia, take what we have in Zim and just pop it into South Africa and it's going to work. So you've obviously built or rebuilt some of the infrastructure, some of the service layers. Have you used partners to do that?
Yes.
Are you using KYC? Are you using sort of existing rails and sort of building layers on top of that? What's been the model?
Yes, so you'll see, so Zambia, obviously the opportunities are different, like we said, the cards. Here we're running around tapping our wearables already, in this market now. But they're like, we don't even have that yet. So recently, there's card accepting devices, cards, it's a big opportunity. So if we just took that and came here, we'd be like, okay, what are we doing differently? So what we did is, we have the same app basically, which we now rebuilt for here or just integrated into a different partner. So right now in South Africa, we just got approved by Nedbank as well. We've got our store value sitting with them. So we have a fully fledged backing there. And then we've got our own NCR license though. So we didn't just, partner there.
Right.
We decided to do that ourselves because it's one of our core business, obviously core businesses. So we're fully licensed there. But when it comes to the other tech, that we integrate, like I always use Bank Zero as an example as well, because you have to kind of get where the others are, but if you're going to be building it from scratch by the time we're live, it's irrelevant. So it's why reinvent the wheel? I mean, we're out there to support smaller other businesses as well. If we're all trying to build the same things, it just doesn't make sense. So, like for example, with them, FNB goes and builds their own accounting platform. Okay, yes, got all these glitches and stuff, but why? Now, Bank Zero goes and says, okay, Zero does this. This is their core business. Let's just integrate there. I mean, come on, it just makes sense. Use a POS provider. Don't go and get your own devices. If it's not going to be your core business, use a partner that kind of eats, lives, and breathes this. Obviously, it's going to be more reliable. Integrate and just offer the service. So that's what Eshandi is doing in South Africa. You'll see we have a lot of services, to kind of create this ecosystem. But our focus stays on this market disrupting product. And that's why we say, if we take something to market as well, we want to disrupt the market. We don't want to just, do what everybody else is doing, with, that mindset of actually helping them and not trying to just milk these people and make money from them. Obviously being a profitable business, but at the end of the day, kind of actually assisting them. So I've always believed in that model. It's quicker to market as well. So yes, your margins might be less, but your resource capacity is much less as well, because now you're benefiting from this company's full team instead of having your full development team building. So it's all, and you can pivot. So, it's a fast moving
I'd say
market.
to that. The only thing I'd say to that is don't use F&B and Zero as an example, because it doesn't work. The saying of our life trying to get Zero and F&B to talk to each other. But anyway, that's kind of a separate issue. But listen, I think you made some really valid points here, and I think that the offering for Eshandi in the domestic market here in South Africa, I think is fantastic. I think it will, certainly go. I believe a long way for financial inclusion, and I know people use that term, and dare I say, it's been bastardized to the death, in this part of the world. But there are true solutions, and true products and services like what you guys are doing that really can change the lives of people. And I think for me, that's what financial inclusion is about. Mike, listen, thank you so much. I'm going to get you back on in a few months' time, maybe in the new year, and see how you guys are doing. But if people want some more information, where's the best place to go, whether they're potential partners, on the B2B side for Eshandi, or even consumers who may be listening to this? Where do we direct people?
Okay, so we have a website, eshandi.com, and then on that website, we've split it into the countries. So that's our global website where you can read a bit about the story, but you'll see there's a global one, and there's Zambia, Kenya, as well as South Africa. You can click on those countries and you'll see the products specific for that market. And please reach out to us. I mean, we're people's people. So, you won't be chatting to a bot now. You'll be chatting to us, and we'd love to take you guys for a coffee and tell you a bit about Eshandi. So I know I get I get very passionate, so they might have to book the day out, but yeah.
That's right, Mike. Listen, I'm waiting for my invitation to come to Pretoria and have a braai with you. I'll show you how a braai is really done when you invite me to the house.
Well, challenge accepted. I look forward to it. I won't order a steak because people tend to struggle with that one.
Hey, separate conversation, one for another time. But listen, I would challenge you to a quickie off if you want.
Oh, there we go.
That confident. Listen, buddy, thanks so much. It's been an absolute pleasure having you on today. Thank you. Best of luck. And we look forward to having you back on in a few months' time.
Thank you so much, Darren. And it's been a pleasure. I look forward to that. Thank you so much. Cheers, guys. Bye-bye.
Likewise.